Good day everyone. Today we will talk about the accounting cycle of Aguila Merchandising. Accounting helps businesses keep track of their money, what comes in and what goes out. Let's see how Aguila Merchandising records and organizes its financial transactions step by step. The first step is journalizing. In this step, Aguila Merchandising records all business transactions in the General Journal. Each transaction is written in order by date, showing which accounts are debited and credited. For example, the transaction on January 2, 2016, where Aguila made its first initial investment, we can see the cash is debited amounting to 500,000 and capital is credited amounting to 500,000. Cash is an asset, and when we move cash in the debit, it means that assets has increased, and capital is an equity. So if we move it in the credit section, it indicates that capital has increased because it has a normal balance of credit. After journalizing, the next step is posting. This means transferring the information from the General Journal to the General Ledger. The ledger shows the balance of each account, such as cash, accounts receivable, and merchandise inventory in one place. This helps Aguila Merchandising easily see how much money or goods it has. So when it comes to posting the journal transactions, the example is the transaction on January 2, 2016, where Aguila made its first investment. The first account is cash amounting to 500,000, and the second account is capital amounting to 500,000 also. So let us try to post this transaction into the general ledger. So into the general ledger, we will find the account that we used in the transaction in the journal. We used cash and the capital. So starting with cash, let's write the date, January 2016, January 2, 2016, and let's write this explanation where what happened in the transaction. We have owner's investment, and the journal reference is GJ1. Why GJ1? Because it means General Journal page 1, and debit because it's the cash, the first investment. So as it has increased, we will write it in the debit. And we can see here on the third column, there is a column for the balance. So this is a running balance that can increase or decrease depending on what happened on the following transactions in the account of cash. So after we post the transaction of cash in the owner's investment, we have the explanation, the date, and the journal reference, the amount. We will now get the account number, which is 1000. We will write the account number 1000 on the reference. Align it with cash so it helps to navigate where we posted the transaction of cash on the ledger. So here it is, the account number and the reference. Next is preparing the trial balance. Aguila Merchandising prepares a trial balance. This is the list of all account balances from the ledger, and the goal is to check if total debits equal total credits. If they don't match, there might be an error in recording or posting that needs to be fixed. So the accounts recorded in the trial balance are from the accounts posted in the general ledger. You can see the cash here and accounts receivable up to the advertising expense. So our total of debit is 823,312 and the total of the credits is 823,312. So our total credits and total debits are equal, and there are no issues or problems that need to be fixed. So our trial balance is good to go. Once we're done on preparing the trial balance, the company makes adjusting entries. Adjusting entries are made to make updates on the accounts, like expenses. Here we have three kinds of expenses: the depreciation expense, rental expense, and fuel expenses. These entries are made at the end of the month because these are just adjustments or updates for the unpaid income or not yet recorded accounts. So after we recorded the adjusting entries on the general journal, we will now post it on the general ledger. So let's make an example. Example is depreciation expense. We'll find on the general ledger the account of depreciation expense. So here it is. We'll write the date January 31, 2016, and we'll write the explanation. On January 31, the adjusting entry is for transportation equipment. The journal reference is General Journal, page 1, and it amounts to 1,250, and the balance is 1,250. So we will get the account number, which is 6,500. So here it is. We will write the reference on align with the account, which is depreciation expense. After that, the next account is accumulated depreciation. So it amounts to 1,250 also. Accumulated depreciation. Here it is. So as it is, and we will write the date January 31, 2016, and we'll write the explanation of what we're posting for, which is the transportation equipment, and we'll write the journal reference, which is General Journal, page 1, and the amount, which is 1,250, and the running balance. After we posted the information on the date, explanation, reference, and the amount, we will get the account number, which is 1,690. And again, we'll find the account that we posted, which is accumulated depreciation, and we will write on the reference number the 1,690. So it is aligned with the account of accumulated depreciation. And don't forget the explanation of the transaction, or the short definition to record monthly depreciation of transportation equipment, since we're allotting amount for the decrease in value monthly, and that's how it is done to post adjusting entries from the general journal to the general ledger. Next on the worksheet, after the adjusted trial balance, is the income statement. On the income statement, also called the statement of financial performance, this statement shows the company's revenues, expenses, and resulting net income or net loss for a specific period. We can see the Total of sales account is included in the income statement, and all of the expenses is also included in the income statement. The totals will result to the net income or net loss. Here we have the net income. Next is the balance sheet. So in the balance sheet, known as the statement of financial position, it shows the company, what the company owes, and the owner's equity on a specific date. So in the balance sheet, in the worksheet, here we have the accounts of cash, accounts receivable, and the equity and the liabilities. The assets, owner's equity, and liabilities are all included in the balance sheet. And the totals are here. The last step in this part of the accounting cycle is closing entries. At the end of the accounting period, Aguila Merchandising closes or resets all temporary accounts such as sales, the expenses, and the inventory. And these amounts are transferred to the capital account, showing the final profit or loss for the business. After closing entries, the balances of these temporary accounts on the general ledger will return to zero. For example, we have the sales, and after we close on the general journal, we will post it on the general ledger, and the balance will return to zero. That means we are ready for the next cycle of Aguila Merchandising. So here are the accounts, the sales discounts, the purchases, and the expenses, all are back to zero. And it is close to capital, zero. So we are ready for a new accounting cycle for Aguila Merchandising. And that's the accounting cycle of Aguila Merchandising. From journalizing all the way to closing entries, each step helps the business stay organized and understand its financial position. By following this process carefully, Aguila Merchandising can make smart and accurate financial decisions. Thank you for listening, and remember, good accounting is the key to a strong and successful business.